The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Hey traders, Stacey Burke from Stacey Burke Trading. Today I'm going to review 3 of the best trade candidates that come right out of the playbook. And again, emphasizing simplicity, stepping back, being willing to sit on your hands, the front side of the week and the back side, and of course Free Cash Friday, which has not disappointed. We'll go through an example of a day 3 parabolic on Wednesday, an excellent opportunity for traders on the crude oil markets. And then, of course, on Free Cash Friday, we had several opportunities. But I'm going to, in terms of keeping it simple, demonstrate the simplicity of the playbook best trade setups. Now, we've gone over the basic model for trade entries on page 29. 3-day setups, 3-session setups, but the importance of Monday's opening range and initial balance. Today, we're going to be focusing on the templates and emphasizing just the simple nature and being willing to step back, identifying the best candidates, perhaps after a first red day, a first green day, or an inside day for a large parabolic move that's driven by other time frame traders, a scalable opportunity. On page 31, I review the 3-day setups. And again, I'm going to just reinforce to traders Monday to Wednesday, Wednesday to Friday is a template. So there's been, a lot of overlap and misinformation, and that confuses traders. And it's important to keep things as simple as possible. The 3-day setup is my main approach to the markets. And, just as I've stated right in the playbook, most of these setups are pump and dumps or dump and pumps. Now, I tend to be biased for the short side, but, so we're looking at a pump day, Monday opening range, maybe a narrow range day, maybe Tuesday pumps, Wednesday pumps. They go sideways. We get a signal day. It might drop a bit, one more small pump, and then a dump. And they can dump down straight, hard, and fast over the course of the week on Free Cash Friday. Demonstrating just how simple it is, but the hard part for most traders is just being willing to sit on their hands, and then they feel compelled to trade every day in the session that they're trading. And so we can take a look at the pound yen. Over the course of the week, we have a large pump day on Monday, which was a reversal opportunity in the Asian session coming out of breakout traders on Friday night. But Monday's a pump day. Tuesday expands the range and goes higher. Wednesday works back up into the high, but closes as a first red day. So the close is below the open. It's quite equal in this particular case, but this is a first red day template. The peak formations are up. Peak formations are up before dropping down late in the session. They pump back up a lower low on the inside. We haven't broken the daily level, but they pump it back up into Monday's opening range high. The reason why I've kept that line there is that the market has not been able to break through that. So we've pumped up on day 2, pumped back up on day 3, closed at the same level, but this is a first red day chart. They pump it back up and break down. Now we saw this similar template only a few weeks ago, very large move. And the easiest way to interpret this is going back to our basic entry criteria on our longer time frame. We're already coiled on Free Cash Friday. Our peak formations are up for a huge parabolic opportunity back to low of the week. Now, this really clearly demonstrates the opportunity with a parabolic trade. And this template has worked Monday, Tuesday, Wednesday, Thursday, pump and dump for a large scalable opportunity. This market moved well over 150 pips from top to bottom. Paul Tudor Jones, imagine your entry point as last night's closing price. We have a market that's breaking down on the inside, heading into our Asian session. No major red news on the calendar for a very tightly risk-reward managed opportunity. So when I say to traders the importance of sitting on your hands, these are the types of opportunities versus trying to trade in markets that are narrow range. This market is going to clear out the entire week. It hits Monday's low of day level before reversing and coming back inside. This is for the Asian session. Day 1, Day 2, Day 3, midpoint range of the week. Day 1, Day 2, Day 3. Free cash Friday on the pound yen, a pump and dump template. If we contrast that with the euro yen, its sister pair, we had a market that was making higher highs. Monday, Day 1, our opening range. Day 2, our initial balance expands the range and continues to push higher on Day 3, as opposed to the pound yen, which stayed underneath of Monday's opening range high. On Thursday, the market pumps up and closes as a first red day. Was one better than the other? Well, the pound yen appeared to be weaker. It did not push higher. That would have been the one that I would have preferred to trade. But both of these markets broke down vertically on signal days on Free Cash Friday. The euro yen pinned down into Friday's closing price. So again, the pump and dump template. Universal entry criteria on the longer time frame has been met, and if we go to our smaller time frame at the beginning of the Asian window, Paul Tudor Jones, think of your entry point as last night's closing price. We're underneath of closing price after a first red day. We have a lower low heading into the beginning of our Asian window, first hour, for the pump and dump parabolic blow off on Free Cash Friday. Now, if we take a look at the pound Australian, we have a pump day on Monday that's broken out of Friday's high of day range. That market continued to expand the range on Day 2. So as I've stated in the past, typically by the time Monday and Tuesday is printed, one of those extremes can tend to hold. Wednesday was an inside day, our signal day. The inside day, one of the most powerful signal days that we can get for either false break or trend trade opportunities. That market triggers the inside day low on Thursday. We have our inside day traders triggered, and that closes as a first green day, which was a ripe opportunity for traders in the Asian session on Free Cash Friday. We have a larger dump and potential pump template. How does price behave when the session opens? Beginning of our Friday Asian session, we have a first green day signal, and one of the things visually that I talked about is to train your eyes to move horizontally at the levels. We have a first green day signal, and we have a market that drops down and puts a peak formation low before engulfing and closing back inside of our universal EMA. This was an opportunity also for traders to scale into as we started to coil into a parabolic acceleration. Remember, it's Free Cash Friday. We're not on Wednesday. It's not Tuesday. It's Friday. And so the opportunity then was that this market is potentially going now from closing price and high of day level parabolically back to the high of the week. An excellent opportunity for traders on Free Cash Friday on the pound Australian. On the backside, so again, we saw the yen pairs, and then we now have also a pound Australian pair taking out the high of the week. So just to emphasize also first green day, once we've taken out that high of the week, we can see how price behaves. 1 push, 2 push, 3 pushes at the high of the week. This market may potentially now be breaking down, heading into our 3 sessions setup, closing session of the U.S. session. Now, if we look at this larger template, once we've taken out the high of the week, and we're on a 30-minute chart here, notice the 3 pins to the high, and this market breaks down back to high of day level and pumps back up. So our opening range Monday expands the range. We close out of balance. Market closed outside of Friday's range. They expanded the range. That new closing prices are ceiling potentially now for a move after taking out the high of the week back to the low of the day. What type of template do we need to see in order for that opportunity to present? Well, for breaking down on the inside, we are going to be looking for a pump and dump opportunity. No major red news on the calendar. We have our low of London put in place. We're back to the high of day level. The market pumps up in our first hour before breaking down on the inside. That is the setup, the template for the pump and dump opportunity. 1 hour, 2 hour, a third hour entry. We've gone over this week in depth. 1 hour, 2 hour, third hour opportunities. We have a 3-push pattern at our double zeros. Our universal entry criteria is met. We have a 1-bar stop, and we are targeting the low of the day. Why are we targeting the low of the day? Because we've already taken out the high of the week. The next target now is the low of the day. We have breakout traders in the market. This was a fantastic trade that just continued to drop, broke through closing price. A little pop-up, another opportunity to re-enter this market as it collapses down to the low of the day level during the U.S. session. A pump and dump larger time frame template. Again, going back to day 1, day 2 opening range initial balance, that forms our extremes. We get a signal day on the inside, but you'll notice that the outside boundaries are what's key here. Traders, if you're trading on the inside, compare those trades to the one where you get the free cash Friday parabolic, an all-in opportunity driven by other time frame traders. Again, emphasizing the willingness to sit on your hands and wait. The pound Canadian gave traders just an absolutely fantastic opportunity to scale in today after an inside and first red day on Wednesday. So going back to our process, Monday is our opening range. It's an inside day. Day 2 expands the range, triggers inside day traders into the market. And day 3, Wednesday, is an inside day as well, but it closes as a first red day, a day that closes below the open after forming a peak formation. Thursday breaks down, and this is an example again of where I've told traders, if first red day doesn't go the first day, but pay attention to the larger template because it can be the second day after the signal that we get the large parabolic move. Free cash Friday, front side, back side. So let's just do that while we're here. We'll just draw a little midpoint range of the week on Wednesday. We have our front side pump and we have our back side working its way down for the dump, a pump and dump template. Now I emphasize recognizing the price action on the front side as we head into Free Cash Friday, the difference between a parabolic trade that goes vertical versus catching moves, scalping bottoms and tops and gaps and all these other things where we have a large scalable opportunity that is driven by other time frame traders that is not coming back. Now we have breakout traders in the market. We've broken out of Wednesday's low of day on Thursday. That market has closed out of balance, and you'll notice again timings, levels, behavior of price. That breakout level is retested as we head into the New York Open. They pump it back up into the high of day level that was made in the London session. Breakout, and then the pullback inside of our universal EMA. 1 hour, 2 hours, a third hour opportunity again. So emphasizing timings, rotation of price, the hourly rotation. Closing price, we made a lower low on the inside. A lower low on the inside on Free Cash Friday in a broken down market with a first red day signal. And that market has now given traders a huge parabolic opportunity that could have been scaled into with a 100% expansion of the range as a potential profit target, which it has clearly hit at this point. So going back and looking at our larger template again, front side, day 1, day 2, day 3, midpoint range of the week, a first red day and an inside day signal, a market that breaks down and coils sideways, making a lower low for the pump and dump parabolic opportunity on the backside on Free Cash Friday. Now on page 19, we've gone over this in the playbook, the pump and dump Monday to Friday opportunities that can present in any market. My job as a trader is to hunt those opportunities out. And as I've mentioned, one pair may only give one great parabolic opportunity in a week, but those are scalable and they are driven by other time frame traders. Now, Wednesday offered traders an excellent scalable opportunity on oil. This is a 30-minute chart of West Texas. We have Monday, our opening range. We broke out of the low of Friday. And Thursday, we made lower lows before pumping back up into Monday's high of day level. the breakout of Friday's low. Tuesday expands the range but closes back inside as a first red day. Now, first red day, we're heading into Wednesday, the midpoint range of the week. And as I've spoke about, we will either get if there indeed is an opportunity, it will be a range expansion trend trade or a reversal opportunity. Now, we've broken the low of the day heading into our U.S. window. We've broken down, and we've broken the low of the week level, but we also had crude oil inventories at 10:30 a.m. On Wednesday morning. Now, that lower low that was made in the beginning of the second hour forms our new low of the week. So this is the 9 a.m. hour low. 10:30, we have crude oil inventories. That was the middle structure of our M. We got our crude oil inventories released. We have now 1 hour. The second hour has pushed our low of, this is our low of week. Our 10 a.m. hour pushes higher before breaking down. That's our high bull candle. High bull, one of the things we talked about. So we have 9 a.m., 10 a.m. That hour closes and our third hour opens, and we have a consolidation and an engulfment after inventories is released. For our universal entry criteria, we've already potentially locked in the high of the day in our London session. We break down. We are now going on a range expansion, and if we just back this up, we can target 100% expansion of that range. If the market does not, it clearly went right through that. We're targeting potentially 200. It doesn't get there into the close of the session, but the market makes it down there the next day. My model is that I would close this trade out as this market is accelerating into the low. I would be locking in my profits at some point, and if it's in consolidation, I would definitely be closing that trade. But this was an excellent, very clean opportunity. The process, day 1, day 2, day 3. Lower low, we have major red news at 10:30 a.m., 1 hour, 2 hour, a third hour entry for the range expansion continuation opportunity on spot crude, West Texas, whichever oil market you were trading. This was an excellent, scalable, parabolic opportunity. This market went almost $2 from the peak to the low of the day and continued into the next day, but an excellent, scalable day 3 trend trade in a broken down market. The simplicity of the process delivers, and as I've mentioned, you only need 2 to 3, if that, large scalable opportunities to significantly compound your account. But it's having the willingness to sit on your hands and be patient and wait. Again, one of my favorite quotes is Bill Lipschutz: if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. The simpler you make it, the more reproducible your results will be. And then also the understanding of scalable opportunities versus just catching moves. Scalable opportunities are ones that you can add positions into in a large winning opportunity that is potentially not going to come back in that session. Zero heat, very little stress, but it's the willingness to be patient and wait for the best trade candidates to set up. Congratulations, traders, on a fantastic week. Huge Free Cash Friday. Enjoy your weekend, and may the markets go with you.